Money Vikings, welcome back. Money Viking G here. I think I have a really interesting one for you today. I'm going to share how I put together and built a $50,000 crypto portfolio, kind of walk you through what my thinking is in terms of building such a portfolio. And I'm going to use as you can see here, I'm going to use the Motley Fool guide to how to create a well-balanced crypto portfolio because I thought it did a really nice job of kind of laying out the rules and the guidelines that I am following that I think make a lot of sense for a middle class wealth builder. So, and to be upfront, of course, there's Bitcoin maximalists, there's crypto maximalists, and I'm a balanced approach. That's what I take. When I talk about building wealth, I talk about all types of things, whether it be real estate investing, real estate investment trusts, stocks, bonds, etc. I am taking a balanced approach to crypto, but I do really like having exposure to it, and especially Bitcoin. I'm not a Bitcoin maximalist yet, but I am definitely of the mind that is the most important of the digital assets. I think that Bitcoin is absolutely perfect in many ways, and we'll talk about that as well, or you can see some of my other videos where I talk specifically about Bitcoin quite a bit. I think there are other interesting digital assets. I think there's other interesting projects. I think that the meme coins are not for me. It's not really my thing, but I know that people younger than me, that's kind of a thing for them. And if it works for you, that's fine. But that's just kind of not my thing. So with that, let's get right into it. So let's talk about what Motley Fool is talking about here, which I do find to be a very helpful resource in a lot of ways. In a lot of ways, I'd like our Money Vikings blog to sort of be another version of Motley Fool. This is kind of one of the inspirations for Jerry and I when we were building the Money Vikings. So let's get right into it. The key points here I think are really important. Limit crypto to no more than 5 to 10% of your total investment portfolio. That's where I am at the moment. That's what is comfortable for me at the moment. Now, I'm sure I'll get comments about, either that's way too high or that's ridiculous, that's way too low. So I'm not saying either one is right. A portfolio and an investment mix is a very personal thing. It depends on a person's age. It depends, I believe, on a person's job security. I think it depends on a person's risk tolerance. I think it depends on their goals. And everyone has a little bit of a different lever to pull on each one of those elements. So, a person that is 65 years old, has a lot of assets, paid off house, etc., is going to have a very different portfolio than someone that is 20 years old just starting out, or even compared to someone who's 40 years old with 2 or 3 kids. Those are, in my opinion, going to be all very different scenarios in terms of how you're going to build your portfolio for wealth building. So, but I am actually right in lockstep with this Motley Fool guide of 5 to 10% of assets. So if a person has, let's say you have, let's say $1 million in assets, then, you're going to be right around the $5,000 to $10,000 in crypto space at the moment, right? So that's kind of what I am thinking right now. So million, just doing, and I just got that completely wrong. What am I saying? If you have $1 million net worth, it's 50,000. So, okay, great. Brainiac here with math. Okay, so anyway, that'd be more in the 50,000 portfolio range if you're at a $1 million net worth. And the thinking goes, if that does not go well and the $50,000 doesn't do well, then basically you've not totally put your whole wealth building plan at risk, right? On the other hand, if crypto and Bitcoin do what they will probably do, especially Bitcoin over the next few years, that 50,000 I think could I think in a lot of ways could double or triple. I really think that's quite possible. Okay. It talks about diversifying by investing in cryptos with different use cases. Yes, I'll talk a little bit about that, but I actually lean away from this element quite a bit. I'm, like I said, very Bitcoin focused. So I'm probably at like an 80% Bitcoin allocation at the moment. So that's not that diversified. I pretty much am putting all my eggs in one crypto basket there. And it talks about rebalancing regularly to maintain a well-structured portfolio. That's something to always think about as time goes on and your portfolio shifts. Okay, so let's get into some other elements here that they talk about. What does it mean to have a well-balanced crypto portfolio? So basically, I put crypto in three basic buckets. There is Bitcoin, which I believe is its own thing. I believe Bitcoin is the king. It is the digital gold. It is the digital capital. It is the store of value for the world. Okay. After that, you have all of the crypto projects and the decentralized finance projects. Those all have different use cases, which we'll go down to and talk about. And then the third bucket I do is meme coins. And meme coins, I think, are cultural expressions. They could be viewed as collectibles, although I have to say I much prefer comic books like Fantastic Four with Doctor Doom, another Fantastic Four with Doctor Doom, number 258. So any chance I get to pull out the collectibles that I enjoy, here's Fantastic Four Mask of Doom, number 268. So to me, I like those types of collectibles better than crypto collectibles and meme coins, but that's another story. Okay, so let's keep going. 7 ways to diversify your crypto portfolio. So number 1, they talk about buying the market leaders. So a simple option is to allocate your funds between the cryptocurrencies with the largest market caps. For example, you could stick to the 10 or 20 largest cryptocurrencies. Not a bad idea. It's just not something I do. I do like this idea better. And number 2, focus on cryptocurrencies with different use cases, because Bitcoin, as you can see, has a very, very powerful use case, especially in this world of overinflation, monetary policy, the value of the dollar. I mean, it really almost has even more use cases for people outside of the United States with currencies that are much weaker than the US dollar. But you can see, Bitcoin is the one at the top with the store of value concept. I think that's a critical use case for that one. And it's designed, it says here, designed to hold value over time better than fiat currency. And I do believe that. Okay. So then there's things like payment coins. They offer fast, low-cost payments anywhere in the world. This is probably things like your Ripples. You have decentralized finance platforms provide blockchain alternatives to traditional financial services. You have gaming coins. They're used to power blockchain video games. And then you have metaverse platforms, virtual worlds where users can explore and interact. Okay. And then you have privacy coins, untraceable transactions in that case. Okay. Then there's smart contract blockchains. And the most famous, of course, is Ethereum. But you obviously have very strong contenders with Solana and Cardano. And I do hold, so although I hold 80% Bitcoin, I do hold some Solana, and I have held some Ethereum, although I haven't held as much recently. Okay, and then it says divide your portfolio into Bitcoin, Ethereum, and everything else. Gotcha. And check out cryptocurrency stocks. So although I've got 80% Bitcoin, 5% Solana, I do hold cryptocurrency stocks, and the biggest one I hold is MicroStrategy, and I'll tell you my thinking of that one. So with MicroStrategy, I think of it as the crypto Bitcoin equivalent of why I buy Berkshire Hathaway. I'm kind of buying into the management and the thought leaders and the technical skills of the people running those companies, right? So Michael Saylor, I do follow him. I do listen to a lot of what he says. I think he is a great prophet for Bitcoin, and he obviously owns and runs MicroStrategy and issues a stock from there. And I believe that he will be able to use and capitalize on Bitcoin within the structure of that stock and that business. So that's why I hold that one. So there's cryptocurrency stocks. There are also cryptocurrency ETFs, right? And so with ETFs, you have things like IBIT, and there's many others. HODL, I believe, is another one. That's the HODL, okay? And so those are Bitcoin and other cryptos in the wrapper of an ETF. And I do hold some of IBIT as well. Okay. Talks about the pros and cons. Got it. Examples of well-balanced portfolios. Okay, Bitcoin, Ethereum, got it. All right. What does this say? It says Dallas Mavericks minority owner Mark Cuban has been a vocal proponent of crypto for years, and he's invested in a diverse range of projects. At times, he's had more than 100 crypto assets. Yeah, that's a little much for me. I want to be kind of just in like the top sort of 5 at times. There's too many to keep track of, so that's just kind of where I'm at personally. And it's okay, so that's that article there. So that's the overall strategy. I think you're looking at, again, for me personally, 80% Bitcoin. Then I'm going something like 5% in Solana. I'm going something like 5% in others like Ethereum and Ripple, etc. And then I've got the remaining 5% in things like the ETF wrappers like IBIT and MicroStrategy. So that's how I'm approaching it. Please, let me know how you're approaching things in the comment section. I'd like to hear. I'd like to look at different ideas. And hey, thanks again for watching, and see you all on the next one.